Hello and welcome to Markets at Noon with me, Ankur Mishra and Mansi Dave. And Mansi, today is a day of green which is continuing in the same territory, around 2 months high in market after 11th of July. We have crossed 25,300 mark.
That's right, Ankur, absolute green, and we are sustaining onto that level, which is still more positive. 25,200 and above is what we were anticipating, expecting and hoping, and now we are ahead of 25,300. So the next level to watch out for, as per experts, are 25,000 at present. If we talk about the next level, 25,500 is something which one can hope for. We're talking about the bank nifty, it is also in green at present, and as you see, around 182 to 200 points of an upsurge with 55,331. Quickly, the larger contributors are Infosys, Kotak Bank, SBI, L&T and TCS. However, Britannia, ITC, ICICI Bank are all the ones which are not performing in trade. But then let's go across to the Jefferies mega event, where Peter Forlenza, Global Head of Equities, and Aashish Agarwal, India Country Head, are talking to us.
Hello and welcome to ET Now. We are at the Jefferies India Forum, and with me is Mr. Peter Forlenza, who is the Head of Equities for Global, and Aashish Agarwal, who is the India Country Head. Gentlemen, thank you very much for joining us today. Peter, to begin with, give me a sense of the kind of investors in this conference, and what is it that they're looking for?
You know, it's interesting. I was thinking about kind of the sentiment and the approach from investors last year when we had this conference. And it was one that I would call was kind of a almost unbridled bullishness. You could sense it on where the India market was trading. And this year, it's interesting. I'm noticing what I'll call confidence and eagerness. Confidence in that between last year and this year, I think what we've seen, many of the companies that we met with last year have delivered on what they projected. And I think there's that confidence. And what I've seen, and we can get into it later, there's continues to be growing interest in India as an investable market. And I think there's eagerness to learn more of what's happening here from the global investors.
And from a valuation point of view, how do you see that? Because last year when you did it, one of the concerns that came in was the valuation part of it. We haven't moved much from that level. Earnings have grown. Liquidity has been mostly domestic driven, and we are still at the same level of 22 times forward earnings, which is there. So, is the investor now, resigning to the fact that this market is going to remain richly valued or valued at current levels?
Yeah, that's a great question, and I'll give my perspective. A year ago, when I was speaking to a year and up to 18 months ago to global investors that were looking to reallocate more assets to India, they were intrigued. There was the bullishness, and many of them would say to me, "But I missed it. Look at the valuations. I missed it." You move forward to today, again, there's still that increased interest in investing here. My perspective on the valuation is the following one. If you look at it versus its premium that it normally trades at versus MSCI EM index, it's actually lower than that.
Yeah.
So it's getting attractive, and you actually have to believe in the earnings going forward, in the earnings power of this country. So I think it's less of an issue today than it was a year ago.
Ashish, MSCI India 5 years back had some 80 companies. Now it's almost double that companies. The flows which have come in are gone to newer paper, and valuations have remained where it is, right? So what is the pitch that you're making to global investors?
No, I think, India has always been a premium valuation market. Good stocks have traded at a considerable premium to their global benchmarks, but it has delivered because the growth has been unparalleled. We know a lot of companies which have been at 100% premium to their peers, but over a longer term have given multiple times the returns. I've seen companies going from less than $1 billion to $100 billion plus valuation, maintaining the multiples over a decade and a half or two. And I think that's what investors do appreciate. I don't think investors are genuinely looking only for value. They are looking for growth, happy to pay the premium. The one good thing that has happened for India is the rest of the EM has also gone up. So Korea has done well, China has done well. So when we talk of valuations, I think there are 2 or 3 parts to it. Earnings have grown, as you said. Markets have been sideways, so automatically there is a 10% correction plus the currency depreciation. And if you look at Korea and China, India is relatively much better now. The one good thing about India has historically been, arguably after the US, it's one of the most diversified markets. So, right, so you want to play consumption, there are enough stocks. You want to play infrastructure, there are enough stocks. You want to play tourism, hospitality, there are enough stocks in the basket. And of course, the large financials, consumer staples, and tech services be there. So unlike a lot of other EM where one sector or one company dominates the index, India really offers various way of playing. Exports, consumption, domestic economy, global metals, all sectors have relevant stocks from an investor perspective. I think we are also going through a major transition. Historically, India allocations were largely from the EM funds. I think we are at the cusp where some of the global funds have started looking at India, given that some of the stocks have really become ultra large.
Yes.
Ultra large in terms of liquidity as well. Very high governance, and that's why we are seeing, I would say we are back to where we were 20 years back, where EM funds were looking at India. I think the global funds have started looking at India now.
What about global flows? If global funds are coming into India, we haven't seen that kind of flow coming into on a daily basis. So, is it on the cusp of entering India, or is it only select stocks that they are looking at?
So, if you go back to kind of mid-23, what I was seeing in talking to global investors, there was some concern around China and both the performance of the market, but also both the performance and the volatility of the market. And there was some, from a global investor standpoint, the global funds, kind of the term that they were using was investability of China. So what I saw between kind of mid-23 into 24 was this reallocation out of China into, firstly, large cap U.S. tech, the Mag 7. We all saw that happen. And that was a place to go initially. Then there were 2 other places that we saw flows going. The first one was very much Japan, and some of the corporate governance reforms and the reallocation of capital back to shareholders. There was great momentum there. But the other market that was getting the most attention was India. And again, that was at the time, though, where investors felt maybe we missed it, given valuations. Now you look at us today, and some of that money, kind of early money, did come out of India and back into China last year, post this conference. But that wasn't really the global funds, in my mind. That was more kind of the EM funds and more traders. If you look at today, I believe there's still the following theme, that U.S. large cap is important. People are making bets on the CapEx cycle around AI with the hyperscalers, NVIDIA, et cetera. That's one. Then it's where else are you going? Kind of mid this year, we did see a reallocation back into Europe, given the defense spending, some of the news out of Germany, as well as the financials have traded well. I think that's largely played out. So you've got the U.S., Europe played out. It's really, to me, back to the same thing, Japan and India. And that's why I used earlier that kind of confidence and eagerness that we're sensing here.
And that's being led by what a good pool of companies which are coming in, the new paper which is there through an IPOs, and a big pipeline of those which is there, right? Yeah.
One of the things that excites us most about India is really the growing amount of companies here. You've got a country that, again, is very entrepreneurial culturally. We've got new companies coming into the market. I think we've had more IPOs in India than any other market globally. Investors are looking for new companies. They're looking for growth. You're bringing more of that to market here in this country than any other country.
And that's a good sign from an India point of view, because then the coverage also increases for you at Jefferies.
That's true. I think, see, if you look at, one of the leading sectors in the US is internet as a space. all of internet in India put together is a very small part of the market cap. But can it be a multiple of that a few years down the line? Yes, it should be. So when Pete says that there are new sectors getting added, new companies which are actually growing, one of the challenges in the market has been the real fast-growing companies were not fully represented in the sector, right? So internet being the best example.
Yes.
But now we have got some of these companies listed. If you look at the last 5 years, the strongest growth has not been in so-called traditional sectors like consumer staples or tech services or financials. The companies that have done well, the sectors that have done well are actually very different sets. Travel and tourism, hospitality, hotels, hospitals, infrastructure, real estate has actually outperformed in growth compared to everything. So if you want to play consumption 10 years back, maybe you were looking at discretionary and staples. But if you want to play consumption today, you can play it through hotels. You can play it through other hard assets. Real estate is a classic example. So a diversified index is actually the best thing because it represents the true growth rather than anything, rather than being suboptimal.
Now you look at a lot of companies which come into India, and internet is something which we spoke about. Now, how do you look at the entire stuff from the point of view of earnings for them, right? Many of the internet companies are not profitable, or they may be break-even but not profitable. And when you bring them into the index, it depresses the earnings of the index in that sense, and pushes the valuation for index as well. So, do you see this sector now consolidating, and we have more new platforms coming in, so that what you mentioned, that internet platforms play a bigger role with respect to the next wave of investments?
So technically, while they get listed, they're not really part of the main index on the day one because there is a transition.
Yes.
So it doesn't depress Nifty earnings as such. Having said that, I think one of the biggest pushbacks on India has been that there are not enough companies which are investing in future in terms of R&D or in terms of taking, the 5-year, 7-year loss track record to build scale, which is what globally, whether it is Max 7, they've all gone through this transition, right? So in a way, we are also creating future Nifty companies. And by the time they are into the index, they will be profitable. And once they are, there is an inflection point. One of the internet companies, which is part of the index, we have seen that how strongly the earnings have turned around, how much they are contributing to the growth part of the valuations and the India story in terms of flows as well.
How do you see that? New emerging companies, do you see flows coming into them? Or is it going to be the traditional brick and mortar companies which are growing at a steady state?
So I think what excites me, if you think about it, what we're talking about is you've got a diversity of companies that are coming. Compare that to Taiwan or Korea. You're a much more diverse market. What I would say is that's exciting. The flows, though, first will come into the large cap companies from the global managers because that's what they're going to know. But over time, as India continues to mature and grow in market cap, they will diversify those holdings. And you will create that next generation of companies that will be in the Nifty.
And what about the broader index, like a small cap and a mid cap? We've seen a lot of interest coming into those companies, and with liquidity coming in. 5 years or 10 years back, foreign investors or foreign flows never used to look at this because of the liquidity issue. But now many of them are, $1 billion or $2 billion in market cap company with good amount of liquidity which is there. So are you seeing a shift of foreign flows looking at selectively those companies where growth and liquidity were coming in?
I'll take that. So, see, I think India has always been a bottom-up market, right? I think while there are a few index stocks and people love to own them, foreign investors have also always looked at India for the next multi-bagger idea. And some of them, as Pete started by saying, we have a very entrepreneurial culture, which is why we have created far more multi-baggers outside of US than anybody else. And I think when we look at investors, they are as eager or as hungry to meet small caps as they are looking at large caps. So large cap are staples, but there is enough and more interest. And we are seeing that. At our conference, we have about 120 companies, and they all have full schedules. It's only because people want to find the next multi-bagger, and it's going to come from a small cap or mid cap. the paper supply that has been, domestics have really led the entire primary, secondary offering investment has come from the domestic. I think foreigners are late to the party, but they are starting to anchor some of the deals. And it's great that we have such a robust domestic savings market, because we had a great session yesterday that is this a 401k moment for India? And I think it is. So the good part is the wealth creation that is happening now is much more well diversified. It's going to the common man, it's going to the average savings, and much more people are able to participate in the wealth creation rather than just a handful of investors.
And will that become a challenge for foreign flows who are holding off, because the domestic market is picking up and taking up the opportunity, and from a valuation point of view, even if valuation is high, there is money flowing into them.
Look, ultimately, investors will find the best companies and they'll buy them. They'll make their own valuation decisions. They will come into the market. Globally, I appreciate that the EM investors have always come in bottoms up, but you will have that first bit of new investors that will come in, and they will start potentially in more of the large caps, and then they'll move into, they'll do the work. They'll find the exciting companies that are growing, and they'll find some that they believe can earn through the value, grow through the valuation.
Peter, how do you look at India from a geopolitical point of view? Because you look at globally from an equity, tariff is one of the key concerns which is there for India at this point in time. From a fundamental point of view, earnings, growth, consumption, diversification, demography, we are much better. But external shocks or external influences in terms of tariffs and something which hold back investments and keep investors on the edge. Let's put it simply.
So I think that's near-term sentiment, but I do believe it exists. Again, if you look at the broader themes, though, of demographics, emerging middle class, entrepreneurial culture, world's fourth largest economy, you're growing. You've got a $6 trillion market now that's going to grow over the next decade and more. That's the long-term theme. The short-term theme of tariffs that everyone is negotiating with, that as I believe it's only 2% of GDP here, we're going to get through it. Let's hope it's short-lived. I will say, though, I do believe it in the near term affects sentiment, but not over the long term.
How do you navigate through that, even though it's a narrative which is there and the impact is very limited on the economy? It does keep people on the edge.
Yeah, but that edge will expire soon. We will get through this. And I think this conference is evidence of that. There's investors who have invested either very little or almost never in India here in this building, excited about India. Because I think everyone knows it's in both countries' best interest to get through this.
Ashish, how are you navigating that? This question, and I'm sure this is something which every investor would be asking you, how will it impact India?
See, I honestly have a very different take on this. I genuinely believe it's what I call a part of growing pain. You are now one of the top 5 economies in the world. You are one of the top 5 markets in the world. A decade back, what we said, what we did probably mattered a lot less than it does now. As you grow as an adult, you have to face challenges which you don't face when you are a kid. I think that's what it is. What India says, India's policies, India's stance matters to the rest of the world. So these things are going to be there for a long term. There will be push and pulls, and that is part of an adulthood, let's put it this way. I don't think these are things that will go away. There will be, which in a way is positive, that we matter, right? And our opinion matters, our stance matters. And today it's trade talks, tomorrow there will be something else, but we have a seat at the table and we need to make our opinion count. So it's good in the long term. Does it mean there are challenges? Of course, yes, it is. And as I said, as an adult, we go through that on a daily basis.
And is the Indian market mature now to look at that from that perspective now? Because a few years back, such things would have created a lot of uncertainty and turmoil in the market. But today, if you look at the markets, how it moves based on whether it's a tweet from Trump or a call from Trump, it's very matured and measured manner the markets move actually.
Well, I think that's a very, very interesting point. Indian markets, are they matured enough? Yes, they are. And if you look at all the news flow that has happened in the last few weeks and the way the market has reacted, thanks to a very strong domestic savings market now, we have SIPs which are all-time high. Investors have a shopping list of if there are corrections in the stock, there are a lot of people who want to participate in the long-term story. I think the noise on the trade talks have been far more than what the market reaction has been. And I think that's the biggest testimony that we have come of age. There is a maturity in the market. It's not as volatile as it used to be. There will be an element of volatility also. I think even today, Pete, correct me if I'm wrong, there are stocks in US which are ultra large caps that move 20-25% in a day based on one news. That's again part of growth. If you're large, people will take a strong view. So to me, yes, we have come a long way and we have a long way to go. But do we matter? Do we count? Yes, we do.